Hey everybody, welcome to Trading Capital's exclusive analysis. In today's video, we're discussing natural gas and oil, touching base on the energy market. So calling all natural gas bulls, it is almost time to go long. The sentiment around natural gas is getting extremely bearish, but the technicals are now coming in to a massive support zone. You can clearly see today on the gap down, natural gas closed down 2.82%, but it was down all the way to 264, over 3 or 4% down in the session. It is getting bought off of the lows, as you can see here. You can see it's piercing the daily 200 moving average, which you actually gapped over, retraced, pierced it, and got rejected. So what does this mean? Well, since you're getting rejected the daily 200, even though this is looking very oversold and could bounce any days, it likely means we're going to head just a little bit lower on the natural gas chart. I love to accumulate natural gas right along this parallel channel. If we can get a move into this parallel channel, call it, 256 or 255 on the charts, that would be the area to start accumulating in. You have a whole host of supports here, 1 pivot, 2 pivot, 3 pivot, 4 pivot zones that should act as a really good support level if natural gas is to retrace all the way down there. You'd be putting in a beautiful higher low scenario here. And if you look on the RSI, it's getting oversold in the daily chart. Last time we were getting this oversold, you had a little bit of a bounce, bearish consolidation, and you made a pullback. Now, just because the RSI is getting oversold doesn't mean that it's going to bounce. Just like it did got an oversold here, you actually made lower price action when the RSI was making higher lows. So that's what I'm looking for. I'm looking for a big dip on the RSI, a bounce, making a higher low on the RSI, but a lower low in the price action. So we're almost there, but not quite ready in the natural gas space. All right, WTI crude. That head and shoulders is still technically in play, being the fact that you had an inverted head and shoulders on the intraday chart that got rejected and negated. It likely means we're going to flush down to the target of 68 bucks. Since we're putting in bearish consolidation here, we may even actually test the lower end of the ranges, call it 65.50, give or take. But needless to say, you still technically are at support right now for oil. Why are you at support? Well, you're simply retracing to this pivot, this pivot, this pivot. You bounced once. Will you bounce again? Time will tell. Volume is certainly increasing at these areas on WTI crude, but the head and shoulders downside target based off of this move is right around 68 bucks, a pierce of 69 bucks. So watch that closely. If you look at XLE energy is also putting in a potential bearish consolidation. You can even see it on the weekly chart over here, consolidating right along the 50, but we've seen this type of consolidation before, just like we did over here, and then it broke out of the range. So right now it's kind of at a pretty key inflection point, putting in a little bit of a wedge pattern. One way or another, I do think that energy is likely going to break down a little bit more, but we need to put in some more sideways chop. Obviously, this is heavily depending on what oil does in the XLE. On that note, thank you everybody for tuning into this video. Please give it a like down below and stay tuned for more price action.